Hello traders, we're back with our daily crypto market analytics. I got an interesting case here. This is the EOS, also known as the EOSUSD. And we've been trying to gauge the market with regards to whether this bear market is behind us or not, whether we're finishing up that huge downside move we had all across board. Taking place for over a year now. Now we see some interesting signs coming from the EOSUSD long-term perspective. I think we're having a quite a bit of an indication that we might be bottoming out indeed. And for us to actually confirm this assumption, we need to stay focused on this particular key level. That's how I see it. Take a look. We had a very local, it was tight. It was happening from the weekly perspective, but it's actually more a daily setup, right? Where we had already two legs, actually three legs. We had that spike here, and then we had that third leg that it seems to be breaking, right? Seems to be breaking. Now, I think this is the last line of resistance we should take notice of, 3.5944. Even though it seems as if price already broke that key level and continued to push forward and break away, this might be a false breakout, right? This might be a deceptive move coming from price action. We will have to confirm this with the weekly bar. This is why I started by showing you the weekly technical picture here. So right now, obviously, we are trading above that top key level and resistance, 3.59, but we need to make sure that price can close the week in a few days time above that key level. And once it does that, the potential here is really huge on the upside. Aside from the fact that we might be engaging with a whole new upside trend that could last for virtually years, right? At least a year or two. Then I don't want to talk about the long-term perspective, but rather stick to the short to medium term. Once we get across that top resistance, I would focus my effort on chasing the EOSUSD towards the next major key level. Now the next major key level is right here. Take a look, 6.63. 6.63, that represents about 60% of potential return from where we're trading right now, right? So considering that we are going to break outside of that limiting system here, blue setup, I think price will first aim at this particular key level. Now, where is this key level coming from, you might be asking? Well, in this case, let me take you to the very beginning of the bear market, right? Pretty much at the beginning of 2000. In the case of the EOSUSD, actually that was around April 2018. Take a look right here. Price was spiking around $23, where the EOSUSD was almost around $23, and it dropped virtually to 1, right? Almost to 1. So that's probably a more than 95% of loss in value. So now when it starts to raise its head, the first thing you want to do is measure the whole move from top to bottom, right? And then apply just the first Fibonacci correction level, the very first one, which prices almost always reach when a genuine correction actually takes form. And that is the 23.6, of course. Now the 23.6 first correction level sits right here, right? 6.63, and that should be our main focus once we get that green light coming from the weekly bar breaking above that 3.59 top resistance level. Interesting stuff. I'll come back to follow up. In the meantime, guys, I'll say goodbye and we'll see you in the next video.